Good evening, and welcome to Blossom Market News. Big session. Washington is fighting over the bill that decides how crypto gets regulated in America. Two exchanges announced they are shutting down inside 4 days of each other, and next week brings a macro setup worth understanding before it arrives. Here is the run of play. The Clarity Act and who is for it. Who is blocking it? The exchange shakeout. The macro week ahead. And what we are actually watching on the chart. Start with the bill, because everything else this week orbits it. The Clarity Act is the legislation that would finally define who regulates crypto in the United States, where the line sits between the SEC and the CFTC, and what rules a company has to follow to operate. According to reports this week, the largest asset managers in the world have lined up behind it. BlackRock, Fidelity, Charles Schwab, Goldman Sachs, Grayscale. Between them they manage somewhere around $50 trillion. For scale, the entire crypto market is worth about $2.2 trillion. That gap is the whole story. It is not that those firms are bullish. It is that they cannot deploy meaningfully into an asset class where the rulebook does not exist yet. It is not a done deal, and anyone telling you it is has not read the vote count. Reporting puts at least 15 U.S. senators as opposed or withholding support for the current version. 9 of them voted against it in the Senate Banking Committee, and others have publicly said they cannot back it as written. Anthony Scaramucci has warned the bill dies a brutal death if it never reaches the Senate floor. Coinbase chief executive Brian Armstrong has made the other half of the argument, that without a framework, crypto companies simply move offshore. And the August recess is closing the window on all of it. Now the story that actually hit balance sheets this week. 2 exchanges announced they are winding down, 4 days apart. BitMEX, the platform that effectively invented the perpetual futures contract the whole market now trades, notified users it ends operations on the 23rd of September, closing an 11-year run. Then BitMart announced its own wind down, starting today and completing by the 31st of January. Its exchange token fell roughly 60% on the news. If you have funds on BitMart, the practical detail matters more than the narrative. Complete verification and withdraw before the 26th of August, because withdrawals after that go to manual review. 2 macro events land next week, and both can move crypto without a single crypto headline attached. First, the latest wave of United States Section 301 tariffs. Markets have reacted violently to tariff news all year, and this is a permanent rate wave rather than a threat. Second, and less discussed, the Bank of Japan meets. The dollar-yen exchange rate is sitting at a 4-decade extreme. That matters because of the carry trade. Investors borrow yen almost free, then buy assets elsewhere. If Japan moves rates, that trade unwinds, and unwinding it means selling assets globally. Crypto is not exempt. On the chart, our position has not changed since last night. Bitcoin has reclaimed the 200-week moving average and is testing the Blossom line at 66.2 thousand. A monthly close above it is the confirmation. One more piece of context worth knowing. There is an on-chain model called CVDD that has historically marked Bitcoin cycle bottoms. Price has never bottomed without touching it. It currently sits near 48,500. That is not a prediction, it is a level worth having on your radar. That is the brief. Spot products for Bitcoin, Ethereum, Solana and XRP are already live, and a past Clarity Act is the thing most likely to widen that list. We will cover it the moment it moves. None of this is financial advice, do your own research, and I will see you tomorrow.